Hi everyone, today I'm very excited to share with you a very interesting case study titled The Mobile Payments Fintech versus the Bank Giants. And this case study is about a very familiar topic in our daily lives, how we pay for things. So think about it. A few years ago, we mostly used cash or swipe a plastic card, but now we have so many choices. Paying with a phone, scanning a QR code, or sending money to friends instantly with an app. But with so many options, the payment industry has become a big battlefield. On one side, we have fintech startups, small, innovative companies that want to change the way we make payments. And on the other side, we have the tech giants like Apple, Google, or PayPal, who already own the devices and platforms we use every day. And of course, we also have the traditional banks and credit card companies who don't want to lose their connection with their customers. So, in this presentation, I will answer 4 key questions that summarize this case study. First question is, what are the 3 types of mobile payments and how do they differ? The second question is, which age groups are adopting these payments and the most and why? The third one is why fintech startups are having a hard time competing with big tech. And finally, what Zelle is and why it has grown so quickly. So let's begin with the first question. The first question is, what are the 3 types of mobile payments and how are they different? The mobile payments can be divided into 3 main types. The first type is the universal proximity payment systems. These are systems like Apple Pay, Google Pay, or Samsung Pay. They use the NFC to let you tap your phone as a payment terminal. And the great thing about this type is that you can use it at many different merchants as long as they have the NFC enabled terminals. So it's very convenient if you want one app that works almost everywhere. The second type is the branded proximity payment systems. These are similar, but they only work in one retailer stores. A good example is the Walmart Pay. If you shop at the Walmart, you can open their app, scan the code, and pay right away. But you can't use the Walmart Pay at Target or Starbucks. And this type is very popular among big retailers because it helps them keep direct relationship with their customers and give loyalty rewards and even collect data on shopping behavior. And the final type is peer-to-peer payments or P2P payments. These include apps like Venmo, Zelle, or Square Cash. These are not meant for paying at the checkout counter. They are mostly used to send money to friends and family. For example, if you go to dinner with friends and want to split the bill, you can just Venmo them instead of handling cash. So, in short, the universal systems are accepted almost everywhere. The branded systems are tied to a specific store, and P2P payments are mainly for sending money between people. The second question asks, which age groups are the most likely to use mobile payments apps and why? So the answer is quite clear. The millennials and the Gen Z are leading the way when it comes to mobile payments. These are people born roughly between 1980 to 2010. Unlike their parents, they hardly ever used checks, and they grew up with smartphones in their hands, so using a phone to pay feels natural and convenient to them. According to the case study, more than 70% of millennial smartphone users use B2B payments in 2022, while only about 38% of baby boomers use them. So that is a huge difference. The third question is, why have fintech startups have a hard time competing with tech giants? So the main reason is that the big tech companies have a huge head start and major advantages. The first advantage is that, for example, companies like Apple, Google, and Samsung actually own the devices and the operating systems. That means that they can integrate the payments apps like Apple Pay directly into the phone when it's first set up. The second reason is that um, PayPal and Square already run massive online payment networks, so they have millions of users and a trusted brand. And third, these companies have almost unlimited resources to improve security, negotiate with merchants, and advertise their services. So because of these advantages, many small fintech startups cannot grow fast enough to compete. Some of them end up being acquired. A good example for this is Venmo, which started as a small startup but was later bought by PayPal and then grew rapidly thanks to PayPal support. So, while fintech startups often have innovative ideas, the tech giants have the distribution, the money, and the trust of consumers. And now the last question, what is Zelle and why has it grown so quickly? So Zelle is a digital payment service that was created by a group of major US banks, such as JP Morgan Chase, Wells Fargo, and Bank of America. Its main purpose is to allow bank customers to send and receive money instantly. All you need is the recipient's email address or phone number. So Zelle has grown so fast for several reasons. The first one, there is no fees for sending money. It means that it's free. And the second reason is it's very fast. Its transfers happen in just a few minutes. It's faster than Venmo, which often takes overnight. And the third reason is it's integrated into existing banking apps. So the customer don't need to download anything new. If you already have your bank app, Zelle is just there. And finally, it has a massive network of over 10,000 financial institutions, and it even works with Visa and MasterCard debit and credit cards. So thanks to these advantages, Zelle reached nearly 30 million users in just 1 year. By 2022, it had about 62 million users and processed over $365 billion in payments, which is even more than Venmo. So this shows how strong banks still are in the payment industry when they work together. So, to warm up, this case study shows us that the payment industry is going through a big transformation. We have three types of mobile payment systems: universal, branded, and P2P. The younger generations like millennials and Gen Z are adopting them the faster. The fintech startups are trying to innovate but face tough competition from tech giants with much more power and reach. And banks are fighting back with solutions like Zelle, which has become a major player in a very short time. So thank you very much for listening to my presentation.